Japan is entering a major turning point in its fuel tax policy, and the changes ahead are expected to impact households, transportation companies, and the broader economy in ways not seen for decades. Today, we break down the decision to abolish the long-standing provisional gasoline tax rate, explain what this means for fuel prices, and discuss how this move could reshape Japan's economic landscape. Stay with me until the end, because understanding this change now could help you prepare for what lies ahead. For years, Japanese motorists have been paying an additional provisional surcharge of 25.1 yen per liter of gasoline. This was originally introduced as a temporary measure, but remained in place for a very long time, becoming part of the standard fuel cost structure. The new reform marks a significant milestone as lawmakers have finally pushed forward a bill to officially abolish this extra tax. The decision, which received approval in a key House of Representatives committee, is expected to clear the full lower house soon and become law before the end of the year. So why is Japan removing this tax now? One of the biggest reasons is the ongoing pressure on households due to inflation and high fuel prices. For months, the government has been offering subsidies to offset the rising cost of gasoline. Ending the provisional tax is seen as a more permanent solution that could provide long-term relief for consumers. Another factor is political momentum. Many lawmakers have been under pressure to ease the financial burden on drivers, especially those living in rural areas where public transportation options are limited. But what will this mean for actual fuel prices? Once the provisional surcharge is abolished, gasoline prices could drop by around 25 yen per liter. For someone who fills up a standard car, this could translate to meaningful savings over time. Transportation companies, logistics services, and small businesses that depend on fuel could see reduced operating costs. This could help stabilize prices of goods and services across the country. However, the situation is not as simple as removing a tax and watching prices fall. The government is planning a transitional phase, including temporary increases in fuel subsidies to prevent sudden shocks in the energy market. Japan's fuel pricing system is influenced not just by taxes, but also by global oil markets, currency fluctuations, and supply chain conditions. These factors could limit how much consumers actually save immediately. There are also concerns about lost tax revenue. The provisional gasoline tax has long been a major source of public funds used for road maintenance and infrastructure development. Removing it raises the question of how the government will fill the gap. Some policymakers argue that Japan needs to shift away from dependency on fossil fuel-related taxes and move toward a more sustainable, modernized system. Others warn that hastily removing a revenue source could strain government budgets unless new policies or funding mechanisms are introduced. This reform also ties into Japan's broader environmental and energy strategies. The country has been pushing for cleaner energy and long-term carbon reduction goals. Reducing gasoline taxes could encourage more drive-home and increase carbon emissions in the short term. On the other hand, a more affordable fuel environment could help stabilize the economy while Japan continues investing in renewable energy, electric vehicles, and infrastructure upgrades. How this balance plays out will be crucial in the years ahead. The timeline is also important. The expected full abolition is projected to take effect by the end of the year following formal approval in the Diet. Once enacted, the policy rollout will be closely monitored to assess its impact on the economy and consumer behavior. Diesel taxes will also see changes, with similar provisional surcharges scheduled for removal next year. This indicates a broader shift in Japan's approach to fuel taxation. For everyday consumers, what matters most is whether fuel will actually become more affordable and whether this will reduce the financial pressure caused by rising living costs. The government hopes that lower gasoline prices will offer relief to families already dealing with expensive utilities, groceries, and transportation. But as always, real-world outcomes depend on market conditions and how quickly the new policy is implemented. Another key question is how this reform will affect businesses. Delivery companies, rideshare services, construction firms, and agricultural operators all rely heavily on fuel. A meaningful reduction in gasoline and diesel prices could improve profit margins and allow companies to expand operations, hire more workers, or lower prices. This could create a ripple effect throughout Japan's economy, potentially boosting growth and supporting consumer spending. Still, critics warn that without long-term structural reforms, these tax cuts could offer only temporary relief. Fuel prices could rise again if global crude oil markets tighten or if the yen weakens. Moreover, removing the provisional tax does not address other underlying issues such as wage stagnation and increasing cost of living, making the policy beneficial but not a complete solution to Japan's economic challenges. Yet for now, the focus remains on the immediate step forward, the formal abolition of the provisional gasoline tax. This marks a significant political achievement, one that previous administrations struggled to implement. The willingness of both ruling and opposition parties to come together suggests that fuel affordability has become a national priority. As the bill moves through the final stages of approval, all eyes will be on how quickly the effects reach the consumer level. Whether you're a daily commuter, a business owner, or simply someone concerned about economic trends, this policy change is worth paying attention to. Fuel affects nearly every sector of society, and even a small shift in price can have large consequences across the economy. If you want to stay informed about major policy changes and understand how they impact your life, make sure you follow our updates. We break down complex topics into easy-to-understand explanations so you always have a clear picture of what is happening. Do not miss the next important development. Subscribe now, stay connected, and be the first to know how this historic change unfolds.